I love Apple. It's been one of my favorite stocks over the last couple of decades. And I think that what Apple has in its favor is that the company continues to innovate. So every time we say that the multiples are too high and it's overvalued, they come out with something new. For example, now we're talking about the augmented reality headsets that are due to come out. I think they're going to be a big player in the metaverse. So, that's a multi-trillion-dollar opportunity there. And they've had massive growth, 25% year over year in services, 20% in wearables towards the end of the year. The company has loads of cash on the balance sheet, so I don't think that interest rates are going to be a massive issue for Apple. I just love the stock, and it's one of those names that I just continue to allocate to. The GDP of Spain and Portugal combined, multiplied by 2, is now the market cap of Apple. So they're certainly growing, and they're continuing to innovate, and it's paying off.
And, you mentioned it's one of your favorites and you would continue to allocate to it. But just to, it looks to me like at your firm specifically, in your ETFs, you focus more on kind of, I guess, more niche, disruptive type companies. Would Apple be something that you would have a big position in any of your ETFs?
So in terms of the ETFs that we look at, Apple could potentially fit into them if they fall into the mix. So if Apple starts making heavy investments in the metaverse and augmented reality, they could potentially be a candidate for one of our ETFs. But we look at things like quantum computing. We look at things like, hydrogen. We're looking at NFTs, and Apple is certainly related and part of that ecosystem.
Sure. Oh, and just to get to some of your other favorites here in terms of, plays on some of those themes as well. Nvidia also, I guess, worth asking the question in terms of how it's gotten, to accrue, what is it, 750 billion market cap itself, but you still think it's worth new money here?
Yeah, absolutely. So this is another one. I do think there are a few stocks that sort of stand out in terms of they have high multiples. Perhaps they look overvalued, but they keep innovating. So let's keep going with them. I wouldn't be surprised if Nvidia is the first $1 trillion semiconductor company. They have a big part in EV, which is going to increase. Nvidia Drive, self-driving cars. They're part of artificial intelligence development. They're part of 5G, the fourth industrial revolution. And, the company has just done extremely well. They've had 50% revenue growth year over year. Every quarter they beat earnings. Every quarter they beat on top and bottom lines. And again, I just think about the future. It's EV. It's the metaverse. It's going to be quantum computing. And the names like Nvidia and Apple are players in those spaces. So you want to have some exposure there.
Weigh in on Plug Power. This has been a wild story for many, many years, a kind of a boom bust thing, and gets people excited about, alternative energy as it plays it.
Yeah, so Plug Power has had, sort of a sad story over the last year. They have sort of massive returns, and last year, sort of down for 60%. But this is a macro theme for me. And again, I think about the future. And in terms of alternative energy and commodities, perhaps the non-correlated trade to what we were just talking about in tech is going to be things like hydrogen. So Plug Power provides hydrogen solutions for stationary and mobile types of applications. So, for example, they help power cranes and different trucks and forklifts in the warehouses of Amazon and Home Depot and Nike, things like that. They also help, provide fuel cell storage and have, power plants and things like that. So if we're going carbon neutral by 2050 and there's going to be this, sort of huge investment in getting there, hydrogen is the most abundant element in the universe, and Plug Power is something that can harness that energy. So, I think that that's a name that's going to play out in the next decade.
Yeah.
Shepard Smith here. Thanks for watching CNBC on YouTube.